Hi everyone, I'm Ken from Crypto Trading KS. If you're new, welcome and welcome back to our KS family. Let's run the numbers. Bitcoin currently down 4.47% to 48,060. Ethereum down 4.94% to 4173. I focus on the smart money mindset to assist you to be more of a financial blessing to yourself and those you love, gaining real wealth in the process. If you would like daily updates on price movements in the crypto market, 7 days a week, 365 days a year, please subscribe to YouTube. I'd like to thank everybody who's emailed ken@kenstanfield.com to lock in their very substantial masterclass discount. This masterclass is based on my 30 plus years in financial markets and my background as a first and second year uni lecturer in stats. The Foundations course will be opened up on the 11th of December. That's a really important thing. That will lay all the foundations for a much deeper understanding of what we go through on a daily basis through trend, timing, and trigger. Trend is about how the market moves. Timing is about identity of opportunities, and trigger is when to buy and when to sell. The masterclass is all about just-in-time knowledge. It's all focused on trading and building a set of skills which takes quite a bit of time. The Foundations course, the Foundations component of the masterclass, is actually not short. There are many foundations that require an enormous amount of focus. Just think about it. You're in literally the highest paid profession in the world. Higher than doctors and lawyers and accountants and engineers. It's a profession and you need to have strong foundations. I'm actually doing knowledge transfer to you from my 30 plus years of experience. This is not a standard type of Udemy course. This is an absolute Rolls-Royce course focused on knowledge transfer. The drip feed will begin on December the 11th, where I'll reach out to you, the people who have emailed me at ken@kenstanfield.com. I had a very funny comment. Do the double D stand for due diligence? That was a classic. It's all about practical skills, understanding the psychology, controlling your fear, and gaining insight into skills that would take you decades to acquire. Rule 774, master yourself to master the market. Self-mastery is critically important in investing and trading, and all investors become traders whenever they buy or sell. As a community, we focus on real wealth. Real wealth is all about integrity and kindness, courage and honor, fearlessness, inner and outer peace, plus money. Self-doubt and self-sabotage are the greatest enemies of any professional investor or professional trader. Knowing that you're worthy because of how incredibly unique you are. That uniqueness makes you automatically deserving of kindness, love, meaning, and every success in life. Rule 45, no alt can escape Bitcoin's gravity. This is a critical rule to understand in the crypto market. In the masterclass, I'll be basically doing knowledge transfer. I'll make sure you have access to my charts and my indicators as well. When we look at the KS model, which is a crypto technical trading model based on institutional price psychology that I developed, we can see the upper and lower bands of the particular price channel that we're in. The upper band up here is 174,221 at the moment, and the lower band is $25,739. We are still in the bull market psychology phase. There's just been a number of black swans, mini black swans, that have hit the market recently. I'd just like to point out that when COVID hit and the US liquidity crisis hit in early March of 2020, we were in the consolidation phase, moving towards the bull market psychology phase. Even COVID, with its incredible decline in prices, didn't derail Bitcoin, and neither will any black swan that could attack Bitcoin or crypto, neither will it. In fact, there were many warning signs before this large dump occurred, and people who bought this dip did incredibly well. professional traders and professional investors look for black swan opportunities. They're amongst the most profitable opportunities in the world. Retail traders tend to run out the door, and professional traders are running in. Always remember, somebody is buying what you're selling, and vice versa. Smart money and institutional investors buy when there's blood in the streets. The problem is, investors tend to get attracted into a market by the higher prices, and when higher prices tend to reverse, they tend to sell, which can cause a very ugly cycle. And of course, the same applies to traders that are just learning. They're called in at the top to buy the top, and when price naturally gets pushed down, they tend to sell the bottom. This is very, very normal and drives a lot of people crazy in the process. Incredible amounts of stress and sleepless nights and conflict are caused because of a misunderstanding of the smart money mindset. My focus with the community is to share my experience on how you can develop that smart money mindset and rewire your mind completely so you think like an institution of one. You become smart money. The smart money mindset always makes in advance probabilistic choices in 3 dimensions simultaneously. It's very unlike the retail mindset, which tends to make one choice. It's either going up, or it's going down, or it's going sideways. Smart money takes all 3 probabilities into account and expects all of them at any time. People are not taught to think in 3 dimensions simultaneously. They're taught to make one probabilistic choice and stick to it and hold on to it no matter how wrong it actually gets. Smart money is incredibly flexible. It understands the dynamics of different markets. What we're looking at here is we can see the recent sell-off in Bitcoin. We parallel it back through price action to determine probabilistic paths. What are we seeing up here at the moment? I'll just zoom in there. Smart money is looking at 3 basic areas in this chart. It's understanding that a resistance level was passed, turned to support, but entered a I don't know where I'm going quite yet zone. You could say that's a technical term, but we do know the price was under resistance. Price needed to cross out of this gray area into the green area to start its initial repair, but getting above this particular resistance line, playing in at about $54,500 is critical to see Bitcoin and crypto start to emerge from this sell-off. What are we actually seeing here? This particular horizontal action is on the way down. The probabilities favor that we'll see more sell-off. And what we're seeing here is price coming down to a level of support around the $48,000 mark. It could conceivably bounce up, for example, to around 50,200 before it gains enough strength from the sell side to pass through this particular support level and make it resistance. This is always how smart money thinks. Many retail investors and retail traders say, oh, okay, it just has to go up or it just has to go down. The point with crypto, it's an exponential market. Many of the technical tools that are used in very boring linear stock markets just don't throw the right signals out. And that's why so many people that use the old-fashioned technical analysis, they make really, really bad choices. They use all sorts of candlestick patterns based on very slow-moving markets, and then they say, why didn't it work with crypto? That's why we frequently talk about Rule 234. Crypto eats technicals for breakfast. The point of that is that crypto technical analysis is actually a new discipline and a new field, and it does do different things to what normal TA or normal technical analysis does. We do see a probability favoring more downside. I would suggest that there's a probability that it could come down to around 42 and then do a substantial bounce up. Just keep in mind that there is negative price pressure in the market at the moment, and seek to position yourself so you can take advantage of it. Crypto is a highly speculative investment class, and it's very different to the S&P 500, which is the proxy for stocks. It's different to gold, and it's very speculative by nature. That means all of these really wonderful percentage movements can go up and down. A lot of people, when they get into crypto, they're sold on a story of thousands of percent gains, 10x, 20x, 100x. Unfortunately, you've got to be really careful. Don't get trapped into a mindset where you expect things. This is a market that requires skill. For example, looking back into the past bull run, the 2016 halving cycle bull run, we had, of course, very good increases in price, but we also had 20, 40, 30, even 50% retracements in price. A lot of people didn't expect that. They just expected the 85% plus, the 40%, the 38%, the 67%. It's fantastic to get the positive price movement. You want to take advantage of the negative price movement when that happens. That's what smart money does. Let's have a deeper look at Bitcoin and its technicals. What we can see, the price, currently $48,064, is just below, slightly below a level of support. It's just kind of under resistance. We can see this level of resistance playing through here and negative air in here pushing price down. We would expect price to be supported around the $43,000 mark. We could get a long tail rejection down to that mark and then up to the $46,000, approximately $800 mark, even up further. Just be aware of the volatility. Make it your friend. That is what smart money does. Smart money is always looking for volatility. Smart money investors always seek to buy the reddest possible dip, and smart money traders do the same and try to find long tail rejections. Many in the community profited significantly from this long spike downwards because we were expecting it. You can see from the bottom of that long tail rejection just up to the top here was an increase of over 23% over 3 days and 8 hours. Buying these long tail rejections is absolutely a way to make money. Getting in and getting out of trades, just using a percent of your portfolio to trade, to hodl, and to swing is really, really good. Swing trading is just basically following a trend until it breaks, but seeking to do so over some period of time. Let's quickly just do an update on the potential issues in the market. We can see Mt. Gox remediation, $9 billion. I covered this extensively in episode 332. We need to have a quick look at Omicron and how that's going. We also need to understand how the India crypto ban is potentially playing out. I did a very deep dive on this in episode 344. The debt ceiling has been pushed down the road to here, February 18th from the December the 3rd. I covered that extensively in episode 332. The other thing, which is probably weighing on the markets the most, is Evergrande. I covered that deeply in episode 321. Looking at Mt. Gox, we don't see any changes in the reserve. There's not been any distribution. We can see the spread of Omicron getting much larger. Denmark has now taken out the top confirmed cases of 577, followed by the UK and South Africa. If we scroll down, we see that a lot more countries are detecting cases, and there's been 78,065 probables. I always go to the source of the information, so looking at the India potential crypto ban, which is unlikely, but when the legislation was being spoken about, the Bitcoin versus the Indian rupee sold off very strongly, and we've seen a bit of a sell-off here, but this is just to do with Bitcoin's price movements in the major markets as well. Turning quickly to inflation, we can see the 5-year and the 10-year break-even inflation rates starting to come up. The Nasdaq has also come up, just doing a little minor retracement at the moment, but this is looking really healthy for the major index. Looking at the transportation indexes, we can see the transport indexes hit a very big slump and have now rebounded quite well. This is really good. With the number of Omicron cases extending throughout the world, we could reasonably expect the XAL, the New York Stock Exchange Airlines Index, to come down again. Looking at the Chinese property market sentiment, we can see that the 7 major companies in the property market have all recently suffered in terms of price, but we can see some price repairing here. That's looking quite good. Let's just zoom in there. This is actually quite a good sign. We can see some of these companies starting to get a bounce, but I think it's more just a technical bounce at the moment. It's just been really, really oversold. But having said that, it's much better than a plummet. Evergrande, of course, has been hit really, really hard. It's kind of like the poster child, the pin-up of the entire Chinese property market. It's getting the most attention, but there is actual net debt of over $1 trillion, not just Evergrande's debt. There's much more debt in the market. It's important to understand the interplay between crypto, stocks and bonds. A lot of people in crypto don't care about the stock market or the bond market. They're making a very, very big mistake. Having been in the markets for many, many decades, it's really critically important to understand the interplay of something risky like crypto to something far less risky like stocks to something just about non-risky like bonds. But as we've seen recently in Evergrande's case, bonds can also default. Basically, they can go bust. However, in times of economic uncertainty and retraction, what we see is money coming out of crypto, coming out of stocks and going into bonds. Bonds are essentially a loan obligation with a fixed coupon payment. A lot more about bonds in the masterclass. The critical thing to understand when the risk goes up of potentially some sort of crash, stocks will flow, the money from stocks will flow into the bond market, and it certainly comes out of crypto. Critical thing to also understand is the size of the global stock market compared to the bond market. You can see these are really large markets, and crypto, I just use 2 trillion as an example. But if 10% of the stock market and 10% of the bond market came into the crypto market, oh my goodness, crypto would explode. A lot of crypto commentators talk about the difficulty in getting to 10 trillion, which is an approximation for the market cap of gold. Actually, that's not hard to do. Really, crypto represents the next evolution in the internet. It's going to change the world. The metaverse, the omniverse, we're actually going to live online. Crypto will become as foundational as the internet was. Getting to 10 trillion is pretty much a joke. It will go far, far, far beyond that. And you are in the best market you could possibly be in at around the earliest time when people don't even understand that. Now we understand how crypto, the stock market and the bond market all interact. This is really important stuff. We can see the fear gauge of the stock market retreating and just ticking up a little bit. But what is happening when fear retreats, price goes up and confidence is restored into the market? That means the bond prices come down, which is exactly what they've done. But however, note bond prices, and this indicates a problem when bond prices go exponentially up. That's what we need to look out for. That's not happening at the moment. But we do need to be aware of the interplay in between all these different macroeconomic forces. We can see bond yields. Look at the correlation between Bitcoin in blue and the bond yields. This has been a very nice association for quite a period of time. They're coming up. They did a technical bounce from a support level, but many people expected bond yields just to fall through the floor and bond prices just to skyrocket. We can see the market does what it does. Looking at light crude oil futures, it also did a technical bounce. It's coming into resistance, trying to get above that to turn that into support. It has another level of resistance to get above. All of these factors give us some sort of insight into the economic and, especially with the case of gold, the geopolitical health of the system. Gold tends to rally when there's a crisis. And what we can see is gold starting to consolidate. It is under a level of resistance, but it's certainly making its way up. We need to watch gold. We can see the US dollar currency index coming back to support, and we can also see the overarching association between Bitcoin and the DXY, the US dollar currency index, is positive. Let's wrap all that up and put a bow on it. What does that actually mean? Mt. Gox remediation, $9 billion worth of Bitcoin flowing back into the hands of the holders that were involved with the hack. Not involved, that were victims of the hack. Okay, we can see there's been no movement in those reserves. That cannot be anything that impacts price. Omicron is starting to get a little bit out of control. That could be a problem. With inflation, it's ticking up. That may actually say to the Fed, okay, we can taper. This is a potential headwind, but we don't panic. Professional investors and professional traders use panic. We don't panic. That's incredibly important. We can see the transportation indexes getting healthier. India's CBDC that they want to introduce, every country does this sort of, I'm going to ban crypto, I'm going to regulate crypto, as they introduce their own crypto for the central bank. Wow, how fun. They all do it. It's actually a game that these governments do. They can't stop crypto. They actually need crypto to legitimize the fact that they want a central digital currency, which will be nothing more than a digital version of that particular currency, or at best a stable coin, but never a crypto in the way, for example, that Ethereum is a crypto. When we look at Evergrande, we can see that there's some minor repair in price, which is fantastic. But of course, that property sector is definitely under duress. When we have a look at this particular price action now, things are starting to make more sense. We're under resistance for a wide variety of reasons, and there are opportunities for smart money to push the price down. Smart money will seek to make retail investors panic and panic sell. That's why we're looking for these long tail rejections. That's what we're about. We have the smart money mindset. We go toe to toe with the smart money because we are smart money. That's why I always put this little guy into the slides. It's so important. Smart money has 3 probabilities that they manage in real time for every single trade that they make. And we know all investors become traders whenever they buy or sell. What will you do if Bitcoin turns around tomorrow and skyrockets to 70,000? What will you do if Bitcoin decides to tank to 40,000 or even 30,000? What will you do? You need an answer to these questions. You need to know what you will do, what actions you will take. What happens if Bitcoin just goes sideways and you want to poke it with a stick and say, come on, Bitcoin, do something? What will you do then? And remember, no alt can escape Bitcoin's gravity. We must look at Bitcoin because your alt's fate is tied to it. Let's have a quick look through the top 8. What we can see is Bitcoin currently under dual levels of resistance. We can see Ethereum performing incredibly well. It's above support. Well done, Ethereum. Binance Coin, what a standout. Look at the power of Binance Coin. Very, very impressive. Well done, CZ. Solana. We can see Solana is under 2 levels of resistance. It will probably, if we see a downturn in the market, you can expect at least Solana to come back to around 135. That's what our 10-5-10 level can be. And it only needs to touch it with a long tail rejection. It doesn't need to move in and live there. It just needs to touch it for your orders to be filled. Cardano, seriously under pressure. XRP, what a beautiful bounce XRP did. Congratulations, XRP holders. We're coming into a level of resistance. What happens with resistance? Exactly what's happened here. It tends to hit resistance and get deflected by it. Hopefully we'll see a turnaround in Bitcoin, which will of course push the gravity of all the other alts with it. We can see DOT lost its secondary support here and it's on its way down. I'm going to drill into this one in a little bit more depth for you because I want to show you something incredibly important. Luna, absolutely fantastic. What a standout crypto. Very strong upward support, very beautiful price movement, just superb. We'll just zoom into DOT. We can see DOT has very, very nice support playing through here. And what has it actually done? Let's check some percentages. What we can see is DOT coming up and up and up. Wow, that is spectacular. And of course, a lot of investors, they get attracted to the certainty of prices always going up. Oh, it took a dip, but it's going up, it's going up, it's going up. Buy the dip, buy the dip, buy the dip, buy the dip on the way up. Inside our community, we think like smart money. We know these things will always retrace. That is what they do. And oops, that is exactly what it did. What we say inside our community is never go all in. Seek to buy long tail rejections. But just how much did this come down by? It came down nearly 56%. Going up 415% and coming back, say 55%. This would have been unthinkable. You think the price coming back to these low levels when it's up there? Can you imagine placing a buy order here, expecting it to get filled? That's what the 10-5-10 volatility fund is all about. And there's a lot of videos on 10-5-10 on the channel. So perhaps do a bit of a search for that. The 10-5-10 fund, if you have something at $10 and it goes down to $5 and then it goes back up to 10, the first leg you lost 50%, but the second leg, if you buy at 5 and it goes back to 10, you just made 100%. That's why smart money is always seeking negative pressure on price. They know the mathematics. It's not difficult to see that if you can trade out professionally from these up and down price movements, you will make far more than you could ever make under a buy and hold. But you need the knowledge, you need the understanding, and you need the mindset. And of course, patience is incredibly important. Just a thing to note, traders are always taking profit. When a professional trader sees potential red flags in the economic system, they tend to go into more cash rather than less cash. That's simply because they're going to trade the spikes. And that is what crypto is all about. They're so spiky. Crypto is spiky. It's so very, very volatile. But you can use that volatility as your friend. A lot of retail investors and traders think of the volatility as an enemy. I believe this is the wrong way to think about it. It's your best friend. Make volatility your best friend. That's rule 130. Make volatility your best friend. When people start investing and trading, volatility is not their best friend. They seek certainty. That certainty puts them into absolute terror. When looking at KSON analysis, this is an analysis that I put together to explain to people where they could potentially be in the structure. And these are 4 stages that all investors and traders progress through to become consistently profitable and attain real wealth. When people are focused on certainty, it's just because they don't understand the probability rules of financial markets. It takes a lot of internal panic to get over zone 1. Zone 2 is a lot of conflict and attacking others, and a lot of sleepless nights as well. Zone 1 and Zone 2 are terrible places to live. Getting out of there as quickly as possible is the aim of the game. Zone 3 is all about probabilistic fearlessness. It's about understanding patience and rules. It is literally the the patience and rule zone. And if you think about all the rules, I have thousands of rules that I have collected across the years. Those rules help me to actually avoid losses. And every rule that I give you, I've suffered losses and just turned it into a rule. And I share those with you because I want you to be more of a financial blessing to yourself and those you love. Zone 3 is all about consistent profitability using a 10-5-10 volatility fund, not about greed at all, about buying the dips with intelligence. But there is no point in being wealthy and rich without meaning. If you have money and you don't have meaning, that's just another form of poverty. Crypto technical analysis, as I teach it, is all about meaning, patience, and rules, getting out of Zone 1 and Zone 2. Zone 1 and Zone 2 come with a very nasty thing. It's called the light switch effect. I named this light switch effect because I saw so many people, if they hear any degree of negative news, they just literally go all out, and then the market reverses on them and goes up positively, and they say, oh no, I got it wrong, I'm wrong, I'll get back all in, and then the market tanks on them. It happens all the time. Smart money, unfortunately, does a lot of manipulation of the market. That's not the smart money that I'm talking about becoming. We don't manipulate anything. We have integrity, decency, courage, and honor. We don't do things like that. And a very important thing to understand is that wealthy thinking is not about scarcity. As more and more people get involved in financial markets, they just learn through the losses. Losses are inevitable. They're the cover charge of the restaurant or the disco or the nightclub that is crypto. What we do in Zone 3 and Zone 4 is we have probabilities as our guide, not fear. We scale in and scale out of positions. For example, if a Zone 3, Zone 4 investor or trader wanted to panic and said, I've got to get out, it has to get out, for example, and that can happen in very, very rare occasions. If that is the case, you would only sell 50% on that particular day. You would never ever sell 100, and then you would wait for the next day. Zone 1 and Zone 2 have a lot of fear in them. That's why I always put out the Real Wealth series. There is a particular video, episode 349, 10 Steps to Master Fear. It's a really valuable video. It will help you think from a different perspective. On a day like today, you could be very fearful seeing all of this red in the market. Fear can cause a lot of conflict and a lot of problems, especially a lot of anxiety. There are specific rules that you can deploy to get rid of fear and to reframe fear in a different way. The first is to understand that happiness is managed unhappiness. This sounds really bizarre, but it's very, very true. Depending on how we look at life, we can always find something to be miserable about. It's not hard. Just look around you. You could have just a magnificent day and just one thing goes wrong. If you put all your attention into that, you can basically suck all the joy out of that particular day. Managing unhappiness is a critical thing for anybody to do. And the beautiful thing about crypto is that it gives you a face-to-face version of your fear. You must confront your fear. A lot of people lose money in crypto because of their own emotional responses. In the comments, please let me know how fear has influenced your investing and trading and what you've learned from it. It's really good to share these thoughts with the community. We have such a beautiful community, so incredibly supportive and very positive. I hope you found the content useful. Please consider sharing and liking this video if you think it will help others. Thank you very much to our moderators for keeping our community safe from scammers. Please say hi and let me know where you're viewing from and if you have any questions. If you would like daily updates on price movements in the crypto market, please subscribe to YouTube. I've left helpful links in the description of this video. Please remember, crypto is volatile. Always prepare yourself for the best and worst case scenarios. Reality will likely be between them. Stay safe out there, my friends. Take care, and see you next time. Bye for now.